Over the past 24 hours, the Japanese 10-year government bond has been on an absolute tear. We track this particular bond every day on this channel for a good reason. The macroeconomic implications of this particular bond rising cannot be understated. For whatever reason, it does not seem to get a whole lot of coverage in the overall market news. This is a very big deal for everybody involved, not just people that are involved in cryptocurrency. In this video, we're going to be explaining what is actually going on here and why this is such a big deal for everybody. Some people are going to possibly get very badly burned by what the results are of the government bond rising like this. Others in the cryptocurrency space are going to benefit greatly from it. We're going to cover this issue at both angles. If you're an XRP holder, this should be something that actually excites you very much. We're going to jump in right now, take a look at the government bond. It's at an all-time high, by the way. What I've got on screen here is the Japanese 10-year bond yield. Right off the bat, we can see it's at 2.376. This is an all-time high that has not been seen since 1998. That's almost 30 years ago. The implications of this is not good for the overall health of the global economic system. Now I have a second chart up because for some reason the other site only goes back to 2006. We can see that the last time the government bond was this high, in 1998 it closed at 2.46. I think we are poised to blow past this in just a couple of days. It's possible that by the time this video is uploaded or by the time that you've seen it, this might already be old news and it might just continue climbing higher. Not only has this bond been climbing throughout the year, it's actually accelerating. I've set this chart right here to be on a 6-month scale. You can see that over the past 6 months, the bond has been rising. But what's really interesting is that it's actually accelerating. So we can see over here on the right, this is continuing to climb at an alarming rate. When I first started tracking this bond late in November of last year, it wasn't even in the twos yet. I believe it was somewhere around 1.75 was the first time that we had ever looked at it. Not even 2 months later, we're looking at 2.376. My original prediction was that this was going to probably hit 2.5 sometime around March or April, and then maybe 3 by the time of the summer. It's getting to that level even sooner, which is all the more implication to me that the Japanese reverse carry trade is going to be unwinding imminently. I'm not saying it's going to happen tomorrow. I'm not saying it's going to happen in 3 weeks or even 3 months. But what I am saying without a shred of doubt is that as this bond continues to go up and up, the reverse carry trade is all the more inevitable. Imagine there's a camel and we're just dumping straw. At some point, the camel's back is going to break. We will see the reverse carry trade unwind. The stock market is going to get devastated and XRP holders are going to be exorbitantly wealthy after this unwinds. Now, some of you might be confused at what's going on here if this is your first time, so let me just back things up a little bit and explain what we were just looking at and why it's so important. The global finance system since the 80s has been relying on the Japanese yen for international loans to fund all kinds of different projects. The reason for this being is that the Japanese yen has been, for the most part, interest-free starting from the 80s all the way to where it is today, until recently, of course. This means that if you were to, for example, buy a soda in the 80s, that same soda or, whatever the modern version of it would still be that same price. Well, this is really great for Japanese citizens, but it's also been very good for the global market because anybody from around the world can go to the Bank of Japan and get a loan, and that yen, it's not going to inflate so that at the end of your loan cycle, it's very easy to pay the Bank of Japan back. The margins on your spread, it's almost impossible to miss on. Let me explain the order of operations on how all of this works. The first thing that happens is that the government of Japan creates a bond. They have multiple types of bonds, not just a 10-year bond, but there's a 1-year bond, a 5-year bond, a 3-month bond, a 6-month bond. There's a bunch of different bonds, but the 10-year bond seems to be the gold standard. It's the one that everybody looks at. When the government issues this bond, its primary customer is the Bank of Japan. So the Bank of Japan will buy the Japanese government bonds and then use that capital to start loaning out to the rest of the world. Now, how does the interest rate on this bond increase? The yield on the bond increases when the Bank of Japan has little faith that the Japanese government can cover its debts. So the yield is increased to give the Bank of Japan more incentive to buy this government bond. And then it uses that to loan out to the rest of the world. Well, this is like a negative feedback loop because the higher the yield goes up, the less confidence the Bank of Japan has that the government can cover its debts, and the less confidence that it gets, the higher the yield goes. So we're seeing right now in real time that this thing is spiraling out of control. This means that Japan is under the threat of actually having hyperinflation, which means it's going to have to start calling back all of its yen that it's lent out to the rest of the world to get on top of this problem. Now imagine, if you will, whether or not you're the entity going out and getting a loan, or you're an actual brokerage in Japan with assets under management buying US stocks, which, by the way, Japan is the second largest holder of US stocks, just behind, you guessed it, the United States itself. So if Japan has to start paying back its yen in order to drive this thing back down, that means that some of the asset managers in Japan are going to have to start liquidating their positions right here in the United States that could hit Apple, Nvidia, Microsoft, Amazon. These are all entities that Japan has many shares worth of. And not just that, but these are also companies that have utilized the Bank of Japan for loans. So it's like a double whammy. Not only do these companies probably owe Japan upwards to maybe trillions of dollars, that's really hard to get a good number on that, but then you also have the Japanese investors that are buying those companies, and all parties are going to have to find some way to pay the Bank of Japan back. Now here is the second part of the problem. Imagine, if you will, I had a bag of M&Ms and I pour these bag of M&Ms on the table, and the Bank of Japan, the yen, is the blue M&M. All of these different entities go to the Bank of Japan and say, hey, we'd like to get your blue M&Ms, your yen. Bank of Japan says, sure, here you go. You got 10 years to give me my blue M&Ms back. Well, what happens is all these different entities will take their blue M&Ms. Someone's going to go out and grab Snickers. Someone's going to go out and grab Reese's. By the time you have to pay those blue M&Ms back, they're all over the place. The original entity that took out that loan no longer has the blue M&Ms. Now, under normal circumstances, this isn't that big of a deal because there's enough time to go claw some of those yen back for the payment loan, or you might even be able to roll that loan forward. Go back to Japan and say, we'd like to take out another loan of all these blue M&Ms, the yen. The Bank of Japan says, sure, be our guest, here's some more yen. You wipe out the debt from that first loan, you roll it forward, and that is how you can kind of have the modern version of the infinite money glitch. Companies have been doing this since the 80s to keep the financing for a lot of their tech and research projects that maybe don't generate a lot of capital. That's how all of these tech companies are doing it. So here comes the problem, the thing that I have been tracking on a near daily basis. These bonds, as they continue to rapidly increase, that means that not only do you go back and say, okay, here's the blue M&M, now you're going to start owing Japan more blue M&Ms, more yen than what you originally started with. But you don't even have the original yen in the first place. So this becomes a problem that starts to really spin out of control. I've got a second graph open here. The overall Japanese interest rate, it's about to cross into 1%. If we look at this chart down here, you can see that since 2016, in fact, if I hit the all-time button, scrolling down so that we can see the graph itself, from 2000 onward, the interest rate in Japan has been at or pretty close to 0% really for the past 25 years. There's one exception to this. Did you guys catch it? 2007 to 2008, the interest rate in Japan was at 0.5. Now remember, that doesn't maybe sound like much on the surface, but with a currency that's not supposed to inflate any amount of inflation is a pretty bad sign. Do we remember what was going on in 2007 and 2008? It was the OG financial collapse that affected many of us here, myself, you watching this video. I personally was in high school. Maybe some of you were in college. I bet some of you were probably already working in your careers. This was a time that basically wiped out everybody. And it's said that when the United States sneezes, the rest of the world catches a cold. We had some absolutely massive economic turmoil that would actually unravel things, kind of create Bitcoin in the first place. All of these dots are connected. What we're seeing right now, if we look at this chart, for the very first time starting in 2024, the interest rate in Japan started to rise. This is the total overall interest rate, not just the Japanese government bond, which we're looking at right over here. This is a problem that I think we're going to see unravel in real time. Now, how does XRP play into all of this? If you're joining this channel for the first time, I'm primarily a cryptocurrency focused channel. XRP happens to be my all-time favorite token. If it wasn't obvious enough with the barrel lid on the wall, I love XRP, and this right here, what we've been looking at on this screen, is a giant reason why. Remember a minute ago when I was saying how all these different entities, they exchange their blue M&Ms, the yen, for different assets. We got the Snickers, we got the Reese's, maybe we just have different color M&Ms. Whatever the case may be, those blue M&Ms are all out there, and when it's time to pay it all back, nobody's got them. Japan's in a bad spot. The rest of the world's in a bad spot. There needs to be some way to solve this problem. Well, the Bank of Japan has been planning on this for quite a while. They've chosen XRP to be their darling coin. It's a cross-border remittance protocol. XRP, it's right there in the name. This token was like almost designed to solve this problem. Not that XRP doesn't do other things, but the reverse carry trade, which is what we're talking about here, it's like the XRP, it just fits like a glove. It's like it was meant to do this. Just in case you're joining for the first time, let's talk about carry trade and reverse carry trade just so you understand the terms. A carry trade is going from a low interest rate currency to a high interest rate currency. So going from the 0% interest rate yen to the US dollar, we all know that inflates. Well, it's not working anymore now that the yen has become an interest rate currency. So the reverse carry trade is to go from a high interest rate currency down to a low, or in best cases, 0% interest rate currency. What do we know has no possibility of inflation? It's XRP. Not only has the Bank of Japan made major announcements that XRP is going to be the focus of their banking system, we're seeing in real time how all of this is going to unwind. We have the supply shock coming to XRP's tokens through the ETFs. Even as I record this video, the Davos Summit is underway. Brad Garlinghouse from Ripple is there. The Bank of Japan is also there. We could be seeing this unravel in real time. And if we do, all of those blue M&Ms, the yen, would be paid back with XRP. If the Bank of Japan decides to say we will take XRP in place of the yen, that means that in order to settle up on all of these different loans that people have with the Bank of Japan, including Japanese asset managers, by the way, it's not just international, but it's also domestic in Japan, we could be seeing trillions of dollars converted to XRP in a very, very tight window. Now, I'm not going to sit here and pretend like I know what the numbers are going to be. All I can say is that whatever happens, the price of XRP is not going to stay at $1.90. For every $1 trillion that gets added to XRP, this market cap, by the way, currently sitting at 115 billion. Using simple mathematics, every trillion that gets added onto that, it's going to essentially multiply its market cap by 10. That doesn't stop there either, because the total market supply for XRP is 100 billion tokens, but only about 65 of them are currently in circulation. This website's wrong, by the way. It is 65, not 60, in case you're noticing that in the comment section. Beyond just that, so we've only got 65 billion XRP tokens in circulation. It doesn't stop there. In order to do the reverse carry trade, the XRP tokens that can be used have to be freely available on the market. If someone like myself or you has an XRP token stashed away on a cold wallet, that XRP is not in play. It can't get used. So really what we're looking at here is the potential for the reverse carry trade to unwind using with an ambiguous amount of XRP. Could be anywhere between 1 and 10 billion tokens. Nobody truly knows the right answer. All I can tell you is that it's not going to be 100 billion XRP tokens that go into the reverse carry trade. It's going to be on the smaller side, maybe a couple billion. The ETFs that XRP has going for it right now has already accumulated over $1 billion of net inflows. XRP's supply is currently being taken off the market. I know right now that a lot of people in XRP are upset about the $1.90 price. You look at the overall chart. Since last year, it really hasn't gone up since July. Every recovery seems to follow with a bigger dip. The reverse carry trade will wipe all of this out in a way that it will never, ever return to $1.90 ever again. This is not financial advice. This is just an entertainment channel only. I'm not a licensed professional. Do your own research and meet with a financial advisor before making any decisions. But if the reverse carry trade unwinds over the next couple of weeks, which it's currently looking like it could very well do that. I mean, geez, guys, we're looking at a 2.376 bond, and it's probably just going to go higher after I post this video. I don't know which straw breaks the camel's back, but the way this is looking, there's just no other way. At some point, this thing is going to happen. And if you miss the boat on XRP, you're not going to get another shot at it. Now, I will say here on this channel, if you do miss the boat, I will be looking for other opportunities in the crypto space for people to really get some good deals and really get ahead. Some of those tokens I'm looking at would be things like Quant, XDC, XLM, Flare, HBAR, Chainlink. I think they all have a really good opportunity going for them, especially after we get clarity later on in the year. Fingers crossed, who knows, clarity might get dumped on altogether. But at least for now, it's still in play. I think XRP is going to move first. And again, not financial advice. But if there was ever a time to get into XRP, it is at $1.90. I don't think it's staying there for much longer. So we've got some very exciting things going on. Brad Garlinghouse is at Davos right now. The Bank of Japan is at Davos. Who knows? Maybe they make the announcement there. Wouldn't that be the best place to do it? This is something that could be in play. I don't want to say that it's going to happen this week or within the next 3 weeks or even the next 3 months. But the reverse carry trade at this point in time, it looks inevitable. At this stage, I don't think there is another way for this to play out. I just don't know when it will. So don't put my feet to the fire if it takes a little bit longer. But every single time we see that bond go up, we're a little bit closer to the camel's back breaking. Remember, the straws are just getting piled on and it's accelerating. So I'm going to cap this video here. If you stayed all the way to the end, I would appreciate it if you could like this video, subscribe to the channel if you have not already. I want to hear from you guys. Do you agree? Do you disagree? What are your thoughts and feelings going on in this overall market? And one final thing, if you really like this video, the best thing that you can do to help me grow my channel, it is a new channel. We're almost at 7,000 subscribers. Share this with a friend, share this with a family member, or you know what? You could share this to social media. Video shares are the #1 thing that YouTube looks for when deciding to boost a newer channel like mine. So I'm going to cap things off here. I stream Monday through Friday, 11 a.m. to 1 p.m. Join in tomorrow. We are literally going to be breaking this down. I'm sure it's going to probably go up overnight and we'll have new stuff to talk about in the morning. But in general, find us there. I'm not going anywhere. I love talking to you guys and hearing from you guys. And in the meantime, I've been Andrew Fillion. I will catch you in the next one. Take care.